Hi folks, myself Raj. Welcome to our channel Code Shack. Thanks to everyone for watching our podcast show. And today is episode number 15. Our discussion topic is overconcentration in a portfolio. So let's start our discussion. What is overconcentration? Overconcentration refers to the situation where an investor has a disproportionately large portion of their portfolio allocated to a single asset, sector, or investment strategy. While it might seem like putting your all eggs in one basket could lead to a significant gains, but it also exposes investors to higher risk. Here's why overconcentration is risky, and here we will discuss some ways to avoid it. So, the risks of overconcentration. The first thing comes is lack of diversification. Overconcentration reduces diversification, which is one of the fundamental principles of risk management in investing. If that particular asset or sector performs poorly, it could significantly impact the overall portfolio. Then increased volatility. A concentrated portfolio tends to be more volatile. Price movements of a single sector uh, or asset can have a large impact on the portfolio's value, leading to higher gains or lower lows, or higher highs, lower lows. Liquidity risk. If you need to sell your concentrated asset quickly, you might find it challenging to find a buyer at a fair price, especially if it's a less liquid investment. Economic or sector specific risk. Overconcentration in a specific sector exposes investors to risk associated with the sectors. For instance, if you are heavily invested in technology stock and the tech sector experiences a downturn, your portfolio could suffer. So now we will discuss how we can avoid overconcentration. The first thing is diversify your portfolio. The most straightforward way to avoid overconcentration is by diversifying your investment across different asset classes, sectors, and geographical regions. This can help spread risk and reduce the impact of poor performance in one area. Then regularly rebalance your portfolio. Periodically review and rebalance your portfolio to maintain your desired asset allocation. Rebalancing involves selling assets that have performed well and buying those that have underperformed to bring your portfolio back to target allocation. Then asset allocation strategy. Develop well thought out asset allocation strategy based on your investment goals, risk tolerance, and time horizon. This strategy could guide you in allocating your investment across various asset classes. Then avoid emotional investing. This is very important. Emotional decisions such as investing heavily in a sector that's currently popular or avoiding a sector that's favored can lead to overconcentration. Stick to your investment plan and avoid making impulsive decision based on market trend or sentiments. Then sometime consider professional advice. If you are unsure about how to diversify your portfolio or avoid overconcentration, consider seeking advice from a financial advisor or investment professional. This can help you create a well diversified portfolio tailored to your financial goal and risk tolerance. Stay informed. Keep yourself updated on market trends, economic indicators, and news related to your investment. This will help you to make informed decisions and avoid overconcentration in risky asset or sectors. So, in summary, overconcentration can expose investors to higher risk due to lack of diversification, then increased volatility, and other factors. To avoid overconcentration, it is essential to diversify your portfolio, regularly rebalance it, and stick to a well balanced, defined asset allocation strategy. Being informed avoid emotional investing, and seeking professional advice when needed can help you in managing risk and building a resilient investment portfolio. So that's everything for today. We want all our viewers to have a successful financial life. Hopefully, you guys like our today's podcast. Please keep watching our podcast and keep sharing with your friends and family. We will try to bring in more financial topic and will help you to save money from your borrowing and also keep you one step ahead from your lenders. Have a wonderful rest of your week. See you again in our next episode. Thank you.